The end of Tether is near. We have been warning about this for years, as I mentioned. Furthermore, our proposal is supported by the TradFi system. All right? After witnessing Michael Saylor and Michael Schrage in a state of terror, we are now beginning to witness Tether becoming a state of complete panic as well. He is the CEO of Tether, according to Paulo. Additionally, the CTO and a cryptocurrency exchange are unable to fabricate this information. You generate fictitious dollars, your fictitious stablecoin is purportedly pegged and has reserves, and you transfer it to your own cryptocurrency exchange so you can purchase anything you want, right? Alternatively, you sell anything you want to sell. You can then use that to influence cryptocurrency pricing. However, he claims that the system is flawed. We make it clear that they are upset. Are you certain? Let's look at this more. From the Bitcoin archive. Justin Tether's USDT is downgraded by S&P Global Ratings, increasing its exposure to gold and Bitcoin. Oh, as a result, the S&P team is currently releasing a report that refers to Tether 5 as the number 5, which is allegedly weak. Alright? Guys, we already knew for a long time that this was the reality. To determine whether or not Tether is going to implode, we don't need the S&P. This is simply another caution, though. Before it actually occurs, they always say it out in front of everyone. I'm telling you, I believe they must. S&P Global Ratings, then Stable Evaluations of Coin Stability. Tether US ET, from November 26 to November 25. It is quite amazing to witness this. Why? As everyone was at least alerted before it occurred. Alright? At least there was a warning. In summary, S&P Global Ratings has re-evaluated Tether USCT's capacity to sustain its PEG to the US dollar from 4 limited to 5, which is weak. A rise in higher risk assets supporting USCTs is reflected in the negative revision. Since our last review, Reserve USCT, which was first issued in 2014, is the most stable coin in existence and has the highest volume in use. Over the last 12 months and in previous years, its price has stayed comparatively steady. However, they're aiming for this, or claiming that the USCT reserves men are behind it. Higher risk assets are correlated with which, correct? First, even with one-to-one backing, let's not exceed this reserve level. The first question is that, furthermore, there hasn't been a genuine audit of the reserves. How come they wouldn't want that? Because they're obviously hiding something shady if you don't want to. A growth in exposure to high-risk assets in USCT's reserves over the past year and ongoing disclosure shortcomings are reflected in our weak asset evaluation of 5. These assets, which have few disclosures and are vulnerable to credit, market interest rate, and foreign exchange risks, include gold, Bitcoin, corporate bonds, secured loans, and other investments. Bitcoin now surpasses the 3.9% over-collateralization margin and accounts for 5.6% of USDT in circulation. Whoa! So Bitcoin is also under attack, aren't you guys? Didn't Bitcoin just get attacked? Bitcoin. In reality, Bitcoin shouldn't be more than this 3.9% over-collateralization margin, suggesting that a drop in the reserve's value can no longer be fully absorbed. Therefore, a collapse in the value of Bitcoin along with a decline in the value of other high-risk assets could result in less reserve coverage and under-collateralization of USCT. Although a significant portion of USCT's reserves are still held in short-term US Treasury bills and other US dollar cash equivalents, Tether still offers few information on the creditworthiness of its counterparties or bank account providers. I just wanted to see that, right? The only problem which they don't want is that if they become sufficiently transparent to show it all, the star cloud over Tether will literally vanish overnight along with all the stout and FUD. But here's the deal, they have no desire to. What? Why won't they simply display everything in plain sight? They could just remove that poof, even if I am aware that they think there is a lot of FUD about Tether, if they so decide. However, they decide not to. Correct? Guys, it's really that easy. That's the problem. I'm not sure. It's really strange. We've noticed other flaws. These include a lack of a strong regulatory framework, a lack of asset segregation to safeguard against issuers and solvency, restrictions on USCT's primary redeemability, and a lack of transparency on reserve management and risk appetite. Additionally, deactivated coins, reducing exposure to high-risk assets could improve stability assessment. This is predicated on improved disclosure, asset composition and assessment, and the creditworthiness of counterparties, bank account providers, and custodians. As we can see, the asset assessment is rated as follows. 1 is very strong, 2 is strong, 3 is adequate, 4 is confined, and 5 is the lowest. 5 is the lowest you can go. Week is the term for it. This very moment. The fifth week of the stablecoin stability assessment was just released yesterday, by the way. Okay, so it's as easy as 1, 2, 3, guys. This is something we discussed a long time ago, so if you want to, be advised of this or not. However, if you work in the cryptocurrency business, I'm very certain that everyone has heard about the Tether situation at least once in their existence. As a result, when it does implode, which I knew was going to happen, every trading pair including XRP is linked to USCT. Because of this, it will most likely collapse with it until it is saved. Correct? I recall CZ saying in one of her tweets, when something implodes, right? Your coin will drop along with it if it is connected. However, it will float if it is untethered. Correct? After that, swim off. That kind of thing. S&P receives a response from Paulo, the CEO, on your Tether rating. We take joy in wearing your hatred. In the past, private institutional investors invested their money in companies that, despite having investment-grade ratings, collapsed as a result of the traditional rating models designed for legacy financial institutions. This led global regulators to question the independence and impartial evaluation of all major rating agencies. Whoa! However, this isn't true, is it? I suppose Heather's true desires are. This is intriguing, since it has happened in the cryptocurrency sector, where people invest at random. Guys, if you buy in a S-coin or a meme currency, you really don't know anything about the inner workings of that coin. Who are the founders, owners, and other such individuals? In the same vein, that must be what Tether wants in this situation. When a business attempts to resist the pull of the dysfunctional financial system, the conventional financial propaganda apparatus becomes increasingly alarmed. No business should have the audacity to separate itself from it. Instead, Tether created the first financial industry overcapitalized business that has no toxic reserves and is still very lucrative. That's a different point. By the way, it's the most profitable business ever. There aren't many employees there. What do you know? Permit me to work for Tether. The Tether guys are the ones I truly want to work for. Correct? I will also be silent, since it is in fact the most lucrative. I'll try to get the tweet to appear. You can't be serious after all. Tether is regarded as the most successful firm per employee in history, and is frequently included as one of the most profitable companies in the world. Tether declared a net profit of more than $13 billion for 2024. Correct? So, with a small staff of about 150 workers. To be fair, I don't even believe it creates that much connection. To press that print, you simply need a few, possibly one, writes. Each employee at the print button Tether makes an astounding profit of between $86 million and over $90 million. Yes, I have to work there, guys, for the video and comparison. Another extremely successful business made almost $2 million for each employee. Nvidia has a real product that is operational in the outside world. In actuality, Tether has nothing. All they have is their stablecoin. And you can tell it's all manufactured and propped up this way. Guys, hurry up. Therefore, everything will go smoothly if I simply work at Tether here. Therefore, Tether is living evidence that the established financial system is so flawed that the emperors without clothes are starting to dread it. But hold on a second. For the past 8 years, Tether has been reportedly promising a thorough examination of the stablecoin reserves. However, they refuse to do it. Tether is negotiating a reserve audit with the Big Four accounting firms. As of early 2025, Tether has yet to complete a thorough audit. Instead, it has simply offered quarterly attestation reports. We've been waiting for an update, but none has arrived. It makes sense that the absence of a thorough audit dating back several years has received a lot of attention. That's right. By the way, the Tether by comparison reports are taken from several documents. Take the Genius Act, for example. Tethered by contrast reports substantial holdings of treasury bills and repo, as well as substantial holdings of gold and Bitcoin. A US-compliant product would need to be modified because these assets are not on Genius's approved reserve list for US issuance. I really appreciate you listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. To be the